Okay, so today what we're going to be doing is a really important video. It's taken me about 4 weeks worth of research to break down this video and get it ready to show every single one of you. It is, as I say it is, my top 3 secrets to trading the Forex market that I have been able to use and succeed with. Stay tuned if you want to find out more about these top 3 secrets. Okay, so like I said to you, these are going to be the top 3 secrets that I would like to share with every single one of you. These are secrets that I have not shared with anyone before on my YouTube channel. And these are 3 secrets that I feel over the last 4 weeks, after going through about 25 different things that I thought were the most important parts about creating my success in the market, I think these were the top 3. Above all else, I couldn't think of any top 3 secrets more important to share with you. Now, one thing I'm sure you must be asking is, why is listening to my 3 secrets going to be important to you? Who am I to you? Well, just to introduce myself to you, my name is Morgan and I'm the director of MS Equities Trading. I'm a professional trader that manages capital for clients based all over the world by trading it in the capital markets. But on top of that, I run a training academy and I teach students in over 28 countries around the world. On top of that, I run a specialized research group where we build specialized trading algorithms that allow us to trade in the markets with automated trading systems. And lastly, I also specialize in business consultancy. But most importantly is going back to that main part. I've been trading in the markets for many years now, and a big focus of my trading has been on trading currencies. Now, the Forex market to many people might be seen as a very clickbait kind of environment, and very rightly so. There's so many people out there in the market right now who are capitalizing on the word Forex. It's a very big catch term, and this is not going to be the purpose of this video. To anyone who follows my work and to anyone who wants to have a look at my YouTube channel, you'll see that the last 86 uploaded videos to the channel have been mainly because I like sharing what I know about the market with the public. I think it's really important that people like myself, professionals like myself, take what we know and share it with others that need it. This is going to be something that is really important to me. Being able to share with you the 3 main reasons why I was able to succeed as a Forex trader. Now, the reason why I call these secrets is not just because they are things that I haven't shared with the market, but it's definitely things that I've heard very, very few people actually talk about. Now, I am a huge follower of my competitors. I follow as many videos as I possibly can, and I watch a huge amount of content out there. And it's been incredibly difficult to find things that have true substance to it. I appreciate the fact that you can sit down and watch a video for a couple minutes of someone analyzing the market, which I sometimes do, but very often you land up with an incredibly broken commentary where there's very little that you can learn outside of knowing where they're drawing their support and resistance lines. This video, most importantly, is about showing you the most important aspects that I've been able to succeed with. And at the end of the day, these things are things that you can use for yourself as fundamentals and you can grow from. So this is not just going to be a video about me talking about my experience. This is actually going to be a video showing you how you can develop for yourself. Now, without further ado, I'm going to be jumping into these top 3 points, but most importantly, this video might run along a little bit long. Now, I'm going to try and keep it as short as possible by going through just 3 points. Don't forget there were 25 points. So also, if you do like this video, tell me in the comments down below if you want me to do a part 2, because then I can add the next couple points into another video. But to start off with this very, very first video, that is what I want to be focusing on. I want to be focusing on only the top 3. So like I said, just to remind you, these are going to be just for trading currencies. Now, the next point number 2, is going to be talking about something that can relate to more than just currencies, but the point number 1 and point number 3 are going to be specifically relating to currencies alone. But starting out with point number 1 is talking about understanding the difference with the types of currencies. Now, there's obviously currencies from all over the planet. I'm sure you've heard of many different terms like G10 currencies, G20 currencies, talking about the majors, the minors, the crosses, the minors and cross, are seen as different terms for the same type of currency. You also have a look at the exotics, and then there are other different currency names that people in the market use. But what people don't realize is these different names aren't just names for groupings of currencies. They're also categorizations for the way these currencies react in the market. Now, just to start off with, I'm not going to be explaining this in depth. I'm going to be leaving a link down below to a website that you can have a look at that fully explains majors, minors, and exotics, as well as lists up exactly what they are. But I'll give you a simple breakdown. Majors are seen as the most used and traded currencies on the planet. For example, the euro, the pound, the Japanese yen. These are currencies that are not only the most liquid, but also the most accessible, in the sense that they might be the currencies that people around the world hold most. So they're the most widely used currencies. It's also important to realize that these majors, when I use the word liquid, are majors that in the market can sometimes be a lot easier to trade. And I don't mean in the sense that they are easier than the next currency, but when it comes to the word volatility, it's a lot easier to see lower amounts of volatility on majors than it is on minors or exotics. And I'll explain that towards the end. The minors are seen as cross-currency pairs. Now, way back when in the day, when you want to convert currencies, you first had to convert back into the dollar and then into the next currency pair. Now, because crosses were created, these were where currencies, majors, would be directly exchanged with minors. And it was able to create a valuation system of seeing the exact value instead of valuing it back against the dollar and then into a different currency pair. Now, minors are seen as currencies that are slightly less traded, but seen as where these currencies are still in wide circulation. Now, these are usually from first world countries, from countries that are stable, countries that have strong government and economic policy. And basically, when it comes to trading, these currencies can be seen as slightly more volatile, but at the end of the day, still great currencies to trade, slightly less than the majors in terms of liquidity. But when it comes to the exotics, this is the great way to contrast the three. Exotics are really important. Exotics are currency pairs that are incredibly volatile. These are usually currencies coming from third world countries or countries that are really, really small and do not have a high liquidity of currency holding. Now, what happens here is because there is less currency in circulation, there is a higher level of volatility. And what this means is that there can sometimes be bigger trading opportunities, bigger moves to the currency. But the difference between the two, and I said that majors are sometimes easier to trade than exotics or minors, it's because majors have a higher level of liquidity, and sometimes it's slightly easier to get in and out of the market, especially at a lower cost. The exotics are seen as much more expensive to trade, much more volatile, and sometimes currency pairs with low liquidity that can be, from time to time, more unpredictable. Now, the reason why I say learn the difference between these three is mainly because traders will get into the market and they will take a position in a currency pair that sometimes isn't as exotic or is a minor, and the currency will act completely different on their specific strategy as opposed to using a major. But the problem is, because they haven't studied this, let's say, for example, they trade the euro US dollar, which is a major, in their previous trade and it went perfect, but the next trade they traded on an exotic, like the Swiss franc, South African rand, and it goes completely horrible, and they don't understand it's because they're trading an exotic. But the difference is, if you're able to understand the difference between the majors, the minors, and the exotics, you'll realize more than just one thing. Number one is that these currencies move differently. Now, I'm sure you're thinking to yourself, well, yes, obviously they do. But like I said, it comes down to volatility. You'll come to realize the exotics are much, much more volatile, whereas the majors are less volatile. Now, this is not always the case, but if you're able to measure the volatility on these markets, you'll realize that it actually is the case. But when it comes down to it, yourself as a trader, you need to understand and differentiate all three currencies. When you're able to do that, you're able to take the strategies that work best, on each and every currency type, and you're able to capitalize on it and always create continued success. If you realize that sometimes you use a strategy on a specific currency and another currency it never works, that might be because it is a minor or it is an exotic, or vice versa, meaning that you're trading different currency types all the time. Now, certain traders out in the market that I've been able to work with, some of them will only trade exotics, some will only trade minors, and some will only trade majors. Some of the guys who trade majors will sometimes only trade 1 or 2 currency pairs. And some of the guys who trade exotics will sometimes trade up to 5 or 6 different currency pairs. It's not unseen, and sometimes these guys will switch between the two. But once some of these guys develop a strategy that works well on one type of currency, they'll stick there and they'll never move. That is definitely a very important secret I was able to learn that I wanted to share with every single one of you. It's an incredible secret because I've been able to create so much success by being able to monitor exactly which currency type I'm using. Now, the next one, point number 2, which is going to be the point that I mentioned to you, is a point where effectively you can use it on not just trading currencies, but on trading any other type of asset class. Very important to realize this is about chart analysis, but it's about scheduled chart analysis. What people don't come to realize, which is very, very important when it comes to trading, is that chart analysis is broken down into certain periods. You have from the 10-minute chart to the 15-minute, 30-minute, the 1 hour, 4 hour, daily, weekly, and monthly. Now, as most of you would probably know, the different candlesticks, depending on which chart you're on, if you're on the weekly chart and you see 5 different candlesticks, each candlestick represents a week worth of price data. Simple. But what people don't realize is when it comes down to something like candlestick analysis, which is quite simple, you're able to actually analyze these charts. Let's say, for example, on the monthly chart, every single time the candlestick closes at the end of the month, there might be some information in that specific candlestick that you can trade and capitalize on. Same goes with the weekly candlesticks. The weekly candlesticks are able to show you great amounts of information that you can capitalize on when trading. These are things that people don't realize. Now, when it comes down to talking about scheduled chart analysis, what I mean by that, I'll tell you how I run through my day. I will start off, firstly, beginning of the month, first day of the month, running through every single currency pair available to understand exactly where the candlestick of the new month has opened. I will reference it back to the previous candlestick and perform candlestick analysis. Now, to anyone who does not know what candlestick analysis is, there's going to be a thumbnail right over here that you can watch. Also, on top of that, the eye in the corner, you must just click on that and it will have the drop down to that specific video. Make sure to watch that. That tells you everything you need to know about candlestick analysis. And in that video, there's a PDF that I give out that is my own candlestick PDF guide that you can make use of. This is something I make use of. Beginning of the month, I will look at the open of the candle. I'll reference it back to the previous candle. At the end of the month, I will do the exact same thing. I will have a look at where the candlestick closed. Between that, every single week, the beginning of the week, I will go through every single currency pair to see where the candlestick opened. I'll reference it back to the previous candlestick, and I'll do the same with the end of the week. And I'll do that 4 times every single month. So not only am I looking at the open of the month and the close of the month, I'm looking at the open and the close of every single week. Very important to realize, when you're able to do this, you're able to track the trend of the market. Not only are you able to use candlestick analysis, but you can make use of the strategies that you trade in order to have a look at if those strategies are showing up in any currency pair. By creating a scheduled chart analysis time, you not only are creating discipline for yourself, but you're creating a demand for your attention towards the market at those specific periods in time for a very specific reason, for a very specific activity. What this allows you to do is when you come up with trade ideas and you spot things in the market, you spot correlations, you spot convergence, heck, even if you spot divergence, it is very, very important that you write everything down. For myself, I've made use of trading journals where I'm able to track every single thing that I see in these currency pairs on a weekly basis and on a monthly basis through all of my different strategies. Now, the company I mentioned to you earlier on, the MS Text Group, where I build specialized algorithms that trade for me in the market, the most important part of this company is that we build automated trading systems that not just look at the market for us, but digest the information for us. What this allows me to do is, instead of manually doing it every single week, now I have an automated system that does it for me. This is how we're able to capitalize on the resources that we have in order to make this job easier. But the fundamentals of it stay the same. Being able to do this means you can track every single month and every single week exactly what is happening in the market. You need to make sure that you do this, and you need to make sure you practice this as much as you possibly can. Going on to the third point is going to be a point that is slightly more advanced than the first two, but it is definitely going to be the most important reason why I became successful at trading Forex. Now, to anyone who does not know my story, I was never a successful Forex trader. I actually started out trading stocks. But before I started trading stocks, I was trying to succeed at trading Forex and commodities. And I did fail for a couple months before I became successful. But one thing I landed up doing was I stepped away from trading Forex completely because it was so complex for me. When I came back to trading Forex, which was not too long later, I realized that the most important part was to understand the origin of these currencies' movements. Now, although it can be argued exactly what influences a currency, specifically because there's macroeconomics involved, politics, fundamentals, technicals, quantitative analytics, and the list goes on. There are thousands of variables that affect why a currency moves and by how much. But the most important aspect behind what a currency does and why it does it over a time horizon of a couple weeks to a couple months, sometimes a year or two, has to do with central banks. Now, all over the planet, every single country that governs a strong currency or a currency that is globally traded has a central bank. Now, a central bank is really important because a central bank performs controlled functions to ensure that a currency is able to stay tradable, stable, and liquid throughout the year. And they continue to do this throughout the country's existence. Now, they also work sometimes very closely with the government to ensure that obviously the government is able to meet its financial demands and able to meet its financial expectations, but at the same time the currency itself that the country is using is stable and usable. Now, the most important part behind this is to understand everything about central banks. Now, that might be sometimes difficult to realize, but central banks are the critical mass behind everything to do with trading currencies on the planet. Now, to a lot of people who are watching this video, you've come to realize that what I talk about is not only of very high caliber, but it's very important in the sense that it's not a 1-minute strategy, or it's not to do with scalping. It's not to do with sitting on the charts and drawing trend lines. It has to do with extensive research. It has to do with digging into the market and understanding beyond what the average trader understands. And most importantly is talking about what a central bank does. Now, central banks perform many different controlled functions. Some of the functions that you will need to understand incredibly well is exactly how they control inflation with the use of interest rates, with the use of quantitative tightening, quantitative easing, how they manage the balance sheet for a country, how they manage debt and the debt cycles that a country has and that a country is able to create, as well as how they manage so many other controlled functions that severely impact how a currency performs. By being able to understand these things, when the news comes out from central banks, of which there are tons of central banks out there, where you can make use of the websites and watch them, and you can read everything coming out on the central bank websites. But when you can understand this information, you can capitalize on it. And when you can capitalize on it, you can make money. Now, two things I'm going to say to you is that this thumbnail up over here lists up some of the most important websites I use. But in that video, it's also talking about the central banks that you can make use of the websites that you can visit. I recommend you visit those websites. Also, another point is to subscribe to the Federal Reserve on YouTube. The ECB, European Central Bank, also has a YouTube channel that you can subscribe to. And on a monthly basis, they release videos that are incredibly important for you to watch. That is going to be another very important thing that you can do. But another big step is to make sure that you also watch this video over here. Now that video is showing you how I was able to use macroeconomics and the fundamentals that I extrapolated from the central banks in order to capitalize on a trade idea on the euro US dollar, which played out perfectly. It played out so perfectly into almost exactly what I thought was going to happen that I was able to show you over 12 months later that the trade idea was perfect. Now you can have a look at that video and you'll be able to see how using the central bank's information is able to provide me some of the biggest trade ideas of 2018. Now you can do this for yourself as well. These top 3 tips, like you've seen, they're free to use, they're free to learn, and they're for you to keep. There is nothing to this that I want to take from you except for your feedback. That's all I want to know. I want to know what you think of these 3 ideas. I know this video is long, I know it was very detailed, but it needed to be. It took me over 4 weeks to understand exactly what was the most important 3 things I wanted to share with every single one of you. When I say I need your feedback, I need to know what you thought of the video. I need to know what you think I should do next. Do you think I should do a part 2? Did you think this was very helpful? And also tell me about what your secrets are. Tell me about what you think helped you in your success in the financial markets and in the Forex markets. To anyone who wants to find out a bit more about how we train students in over 28 countries around the world, you can make sure to visit our website, www.msequitiestrading.com. On this website, you'll be able to see how we train students all over the world, how we use a specialized online training platform, as well as mobile apps integration, as well as talking about exactly how we're able to provide a 12-month training program, private coaching, extensive support, as well as a verified track record. Like I said to you, every single video I've uploaded onto the YouTube channel showing you my trade ideas have been trades that I have taken myself. Not only do I have verified portfolios that you can review to see my trading performance, you are also able to follow me on Twitter, Morgan B. Sampson, and you are able to see all of the trades that I open and close, as well as the trade ideas that I send out on my Twitter page. It's very important that you also make sure to get in contact with us if you need more information through study@msequitiestrading.com. All the links to what I've mentioned are going to be down below in the description. Like I said to you, make sure to leave a comment, let me know what you think, and also leave a like if you thought this video was good for you. Once again, I will see you in the next video. Cheers for now, everyone.